Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Chris Dearborn. He's the managing director on Nasdaq's market intelligence desk with our weekly recap of what's happening in the markets this week. My favorite hit of the week, as always, Chris, it's 2:15. Means we're almost.
It's Summer Friday.
I know.
Here we are.
We have to move the schedule back a little bit here. All right. Anemic volume in the markets today.
Absolutely.
Any surprise?
You know, since the 4th of July, it's a typical summer, and what you're seeing is trading volume is scaling significantly below the average. This year, we've only been averaging 7.1 billion shares on the tape, which is significantly lower than the previous year, which is 7.2 billion. And if you look at certain periods of time over that, high volumes bring uncertainty to the markets. What you're seeing is lower trading volumes, which means that markets are having that Goldilocks effect and kind of moving kind of higher, because the economic data at the end of the day really isn't as bad, even though Chairman Powell likes to talk about uncertainties. And uncertainties is what was talked about in Congress this week and kind of gave the market the boost. We're looking, you know, 3,000 S&P 500. Yep. Here we are.
Well, it's going to tee it up for that interest rate cut. Let's take a look at the S&P 500 on the daily here.
So what you're looking at here is a 52-week, one-year chart. It's a daily chart with the S&P. We bring this one up quite often because it is a true tell of what is going on in these markets. What you see here is that the index is trading significantly higher than all the moving averages, and it's being led by risk-on sentiment. Risk-on sentiment means when people are buying stocks opposed to selling, which is risk-off. And sectors that are leading this space right now, you have communications, you have tech, you have industrials. You have people who are looking to move this sector higher because they need to put the money to work. And if you're going to put the money to work in the stock market right now, you're going to put it into large caps because the S&P is significantly outperforming the Russell. And what you're looking at here is tech, because tech is a good venue of that high drive engine that's moving this market higher.
All right, let's take a look at the 10-year, 2-year spread. Brian did some work today in the note with this.
Yep, Brian did a great job again, as usual. So what you're looking at here is the differential between the 10-year and the 2-year spread. Now, we were looking for an inversion earlier in the last couple of weeks. We didn't get it here. And what you're looking at is a potential bullish reversal. Remember, spread yield goes inverse to the actual purchase. So when people are buying bonds, the yield decreases. And with that, you're seeing people putting money to work. The coupled with this, which I didn't show today, was a gold chart. Gold, again, is trading above 1,400, still above near 52-week high. People are putting money to work, but they're not sure where to put it. That's why you're seeing lower volumes in the markets on the equity side. That's why you're seeing people buying bonds here. And that's why you see people putting money into gold. They're all getting yields, but they're not really sure which one's going to be the winner here. You know, you go back about 2 weeks ago, and you had 100%, we still have a 100% chance of the Fed cutting rates in the next meeting at the end of the month, but there was almost a 40% chance that it was going to be a 50 basis point cut as opposed to 25. Chairman Powell all but sealed the deal with Congress, saying that, you know, we're going to be getting a 25% basis point if you look between the lines. Uncertainties in the market, uncertainties on trade, that's moving forward. And as everything lines up, the economic data really isn't that bad. It is definitely slowing, but who can keep up that pace? We're at a record pace here. So what you're looking here is people are going to start rolling off of the bonds, and that's why you're looking at a bullish reversal on the yield, which means that people will start selling the 10s and the 2s, and where they're going to put that money. Maybe gold, but probably equities.
Well, and let's go back to regarding the Fed. You know it had to be teed up for a 25 bip cut. That had to happen. Doing 50 at this time and kind of putting all your eggs in one basket, what happens? Because we will eventually get a recession. It's part of the economic cycle. You need to have some ammunition there.
Well, there's a lot of ammunition that they have that they can do, right? The QT is kind of rolled off, and you know what you're looking at here is, you know, where else are you going to put your money globally right now? Europe is still in a phase of uncertainty. You have Draghi leaving the EU, potentially Lagarde coming in, which is very good. Different mentality, but still very good. You have uncertainty over England and what's going on with Brexit, and you're showing slowing capacity. Germany is showing negative yields on the Bund. So what you're looking at there is people are looking for growth instead of just preserving wealth. If you're looking to preserve wealth, definitely put money into the Bund right now. You're not going to get much for it, but what you are going to get here is a little bit of yield on this. The equity market is uncertain. People have been calling for a top in the equity market for a significant period of time. If you go back to where the S&P 500, well, look, 3 years ago, right, after President Trump was elected, the market sold off on the futures and then continued to go on a terrific run.
That was one of the best buying opportunities ever, that 800 point drop.
And then you go back 2 years ago, you got February, you've got beginning of this year, May was unbelievable sell-off, higher trading volumes. So since the 4th of July, we've only been averaging just over 6 billion shares a day.
Yeah.
That's such a significant drop-off. And then the Russell rebalance, which is traditionally one of the highest volume days of the year, we didn't even reach 11 billion shares that day. It was 10.9, which is one of the lowest volume Russell reconstitution days in years. What you're looking at is people are fully vested, and they don't know where to go. That's why you're seeing a diversity of equities, bonds, and commodities, and people are buying everything across the board because they're uncertain. Investors want certainty. They want to preserve their wealth, and they also want to grow it.
All right, let's wrap up here. We have 30 seconds. Next
Yep.
week, I think we will see some of that volume come back
Yep.
onto the tape. You have the big banks kicking off earnings.
Right. You're looking at a light print for earnings. People have low expectations coming into this quarter. The banks kick it off. You got Citi on Monday, J.P. Morgan, Bank of America, Wells Fargo, all to follow. And then back half of the week, you got Microsoft, so you got to look at some of the tech names too. Next week is going to be a good look into the window of what people have been doing for the last quarter and to see if that tariff trade was really kind of impacted some of the stocks that have international business, but more importantly for the banks, what the interest rate adjustments have been for them. We'll see what the
Well, it's
inflows
really
and
interesting
outflows
because
are.
if you get that 25 bip cut, right, and if earnings expectations are so low, if they're just decent, that could be another leg up in the market.
It absolutely could, because you need something significant here to sell off the market, and it's going to be a macro event. There's two macro events that would do that. One, if something happens with the China trade tariffs and that falls apart, or worse, something else happens in the Middle East.
Yeah.
Those are the two things that the eyes are on right now, and if that happens, that could sink the market significantly.
All right, Chris, as always, thank you. Have a
Thank
great
you.
weekend. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.